think the charts are just so honest in terms of looking at it. And I always use this analogy of saying, charts are the one truth that a trader or an investor can focus on, where it doesn't sway you based on hype. And that's why they tend to tell you the correct outcome of where things are going. So for sure, number one, looking at the Bitcoin chart, to me, this is where a technical bounce should have occurred. A lot of people were surprised when Bitcoin went below the 19.5-ish 2017 high. But if you understand how markets work, they tend to just go a little bit beyond key levels because there's a lot of stops put there. They need to run those stops. They have to get the maximum people bearish before the bounce can occur. So we saw, for instance, some bankruptcies, Celsius, Voyager, and some other situations as well that were really adding to that bearish sentiment. And that kind of led right into this bounce in the near term. And I still think the market has more upside in Bitcoin. So for me, the first target I have on the upside in the near term is that this pivot low, which was the Terra Luna low, that's probably a near-term resistance level, right? After such a dramatic move up in Bitcoin, where you went almost straight from 19,000 to 24, it makes a lot of technical sense why price needs to pause, have a little bit of a pullback. We heard from Elon Musk yesterday with Tesla that Tesla sold 75% of its Bitcoin. Again, I don't think that was anything other than Elon Musk trying to just pare back some risk, but a lot of people, that'll be used as a reason to sell their Bitcoin as well, since he has so many followers. When you have a confluence of trend lines kind of converging, that's going to be a bigger resistance level in this case than one trend line. And so what you can see here is if you connect the high from 2021 November and the high here, that trend line is getting very close to this area here. So my thought process is that I'm pretty certain, I would say 70-80% sure that we'll see the 25.5. I think there's probably a 60 to 70% chance we'll get up to 28 and change here. But this is kind of my zone of where I think Bitcoin stalls out before the next leg lower. And again, I know people don't want to hear that. I don't blame them, but I do still think there is one more leg lower to flush out a lot of people that think the lows are in here. And I worry that we haven't seen enough hardship in the crypto sector. So one of the things that I pay attention to is, seeing Voyager, seeing Celsius. I mean, those are things that naturally have to occur, but I still think that you haven't seen enough of it. It bothers me that Michael Saylor, there hasn't been, it got down to 21,000. He then said, oh, my level's much, much lower. The markets almost tend to kind of squeeze those people. And it doesn't seem like MicroStrategy has been squeezed yet, or some of these other players out as well. And I still think there's far too many cryptocurrencies for a healthy market. So I'm a huge long-term bull on Bitcoin and cryptocurrency. I think it's the wave of the future, just like the internet was. But we haven't fully seen the internet collapse that we saw in 2000 replicated in crypto just yet. That we've seen a lot of this kind of bloodletting going on, but I don't think we've seen all-out panic. And again, if anything, this crypto correction should be more substantial than past ones because the Fed is not printing money anymore. This is the first time in Bitcoin's lifespan where the Fed has not been printing a ton of money. So that would lead me to be more cautious, thinking that we could see some further downside after a bounce here. Just the fact that the Fed is being more aggressive to fight inflation. For me, when we got down, so I've always said since we were at 69, 68,000 is that there would be a time where I start accumulating a HODL position, right? And so what I did was, and this goes to your point too, is like, I don't know where the low is going to be. Maybe it is the low. It's very, very possible that the low is already in. And so what I did was when we got to 19,000, I started what I would consider to be a 1/6 position of what I want to accumulate of my HODL position. So again, if you think about it, let's say $120,000 is what I want to HODL on Bitcoin. I put in 20,000 at 19,000, and I'm just going to leave that there because if this is the bottom and we go to 100 to 500, I do want to have exposure. And I think we're low enough when we got below 20 where it's smart to, even if it goes to 12, if you're in at like 19, 18, 20, it's not that big of a deal versus if you're in at 65,000. Then it's like major pain. especially if you're in that dollar cost averaging mode, like what I'm looking to do. So I think that's important, and I would say that that's kind of the attitude I would tell people that are kind of mid to long term to have, is that in the scheme of things, you're going to look back on this and say, oh, what did it matter if I bought at 20 or 18 or 16 or even 12? At this stage, when it's 500,000, you're just like, this is awesome. And again, the 1/6 basically comes from 20 years of trading experience, where in my first 5 years as attempting to become a profitable trader, I found that, when I would go all in and say, oh, I'm going to be right on this level, the market always made me look the fool. And so I adjusted that. I kind of looked at my trading journal and my kind of thought process and how my results were coming out. And I saw that, wait a minute, when I would buy all in here of my full position, 70 to 80% of the time it would go below that. And sometimes a lot below that, where I would be in a lot of pain before it kind of played out, right? So the idea is that I learned from those, and I said to myself, listen, if I just buy a percentage of what I want to own, and then I space out my buys methodically, I'll do much, much better. And I have. My win rate has soared because of that kind of thought process. So what I'm doing with Bitcoin is, at 19,000 1/6, basically between 2 and 3,000, every 2 to 3,000 down, I'll add another 1/6 position that gives me basically the ability to accumulate all the way down sub $10,000. Emotion at a minimum, and emotion is the worst thing as a trader can have. You have to be robotic. You have to just say, okay, these are the facts. So when you tend to go in a full position, you're like on the edge of your seat right away, versus when you're in a 1/6, it's like, okay, if it goes down 3,000, no big deal. I almost want it to go down 3,000 because I want to continue to accumulate. And if it doesn't, and it goes to 100,000, I'm still making great money anyways. And it's that mentality of being defensive as a trader that I think made the big difference in my trading career versus being offensive. Offensive, you go in at a level, you're saying, oh, I'm going to be right all the time, and the market makes you pay. Versus defensive, you're always kind of playing the safe game, which ends up making you so much more money over the longer term. Gauging that emotion of the crowd, of the masses, is the most important thing a trader can do, aside from learning the technicals of the chart. It's normal to have those emotions, but the best thing to do is to always go back to the chart and just look at something. So you go back to the 2021 high over here in November, and one of the things I stress, and I know you guys stress it too, is you don't want to be one of those chasers, right? And so when you had you're basically piercing double top, and I understand the breakout mentality, but at the same time, you also have to look at where it came from. And you have to say that, okay, listen, like literally in 3 weeks, Bitcoin went from 40,000 to 65, 66,000. Do you really want to pay up that amount? And then also kind of juxtapose that with the emotion and say, wait a minute, everyone's too bullish. Pull yourself back and say, wait a minute, this looks extended to me. How much higher can it go before it just naturally has a pullback? And then maybe at that point, that's a buying opportunity, and reevaluate it there. But I think the charts are just so honest in terms of looking at it. And I always use this analogy of saying, if I go to the mall 1 week and I'm like, oh, I need a new pair of jeans, and 1 week that those jeans are $100, and then I go back the next week and I'm like, those same jeans are $200. I don't say to myself, oh my gosh, now I really have to buy it and maybe buy like 5 pair at $200. I say, wait a minute, maybe next week they'll go on sale again and I'll buy it at $100 again, right? I think the key for me, both short and long term, is saying, okay, before I even put anything in my limit orders for a buy or anything, let me first come up with my game plan, right? So let me think about, well, what is my thesis for getting in this trade here? Why am I liking it? Is it because it's fallen dramatically and we're into the 2017 highs? That's a valid technical factor, double or pivot high from 2017. And then also, once you have a firm thesis, and it should be something where, like, envision that you have to go before the board, right? The board of a thesis, topic for a college or university, and you have to defend that thesis. Being stress-free in trading is so liberating. It makes you think so clearly. And so again, it's just about the thesis, knowing your total investment exposure that you're going to go to, and then understanding how much of a percent of that you'll start in at what levels. So I think you have to pay attention to the signals you're seeing. I think any trader pays attention to the technicals, right?